tonight on our Money Monday segment, I want us to delve into the stock market. Our guest this evening is a financial tutor and the programs manager at Thotho. I'll let him tell us more about that details later. But first things first, welcome to Studio Mike.
Thank you very much, Anne, for having me. It's a pleasure to be here once again.
Yeah, so I understand it's not your first time being here, so just tell us who you are so that our viewer tonight will get a more in-depth idea on what you're about to talk about tonight.
Right, again, thank you, Anne, for the invite. For the viewers out there, thank you for tuning in. My name is Michael Thotho, and I am the programs manager at Thotho Limited. And what we do at Thotho is we are out there to shift the mindsets of purposeful people like you so that you can create wealth and live abundantly. And as we do that, or how we do that, is through training and coaching on matters finances. And yes, that's why I'm here today to talk especially about investments.
All right, now we are going to get an idea from an expert, right?
Yes.
All right, now, like I have mentioned earlier, we are talking about the stock market. Kindly explain to us what this is for somebody in Mashinani who is hearing that word for the first time, and how does stock market work?
All right, great. First of all, I'd like to define what a stock is. But before I do that, I would like to say that a stock is can be used. There are other words that can be used interchangeably. One is shares, and another one is equities. So when you hear stocks, shares, or equities, it means the same thing.
Yeah.
All right. Now, what a stock is, or what a share is, or what an equity is part ownership of a business. All right?
Yeah.
Yes. So that's why you hear of the word shareholders. So they are part owners of a business, right? So that's what a stock is. So it's part owners or part of a company that owners have. Yes, and particularly for the discussion today, it is publicly listed companies. That means companies that have been listed on the Nairobi Securities Exchange.
Yeah.
Yes.
Now, tell us about the Nairobi Stock Exchange Limited. I understand that now it's called the Nairobi Securities Exchange Limited.
Yes.
That was changed in 2011.
Yes.
Now, just tell us your take on NSE, and if at all it's a better option when it comes to trading and stocks in the country.
Great. Now, NSE is just the market that people go to when they want to trade in stocks or in shares or in equities. And now, if you'd like to invest in stocks, you first of all need to learn what investments are, and then also make the decision and see whether stocks will work for you.
All right.
Right?
Yeah.
Now, every time you talk about investments, you have to know what an investment is, again, so that you know whether this investment or this decision I'm making is great for me. Now, investments work in different ways. And I'll start basically by saying that there are three things that an investment can do for you. The first thing is preserve your capital. So we call it capital preservation. And I believe probably you talked about that in the show last week.
We sure did.
Yes, so that means saving. Right, capital preservation. And then another thing that an investment can do for you is it can give you income. All right. Another thing that an investment can do for you is that it can grow your capital growth. All right. So those are the three options, or the three qualities of a good investment. One, preserve your capital. Two, give you income. And three, grow your capital. Now, when you talk about stocks, it falls in option number 2, which is give you income.
All right.
And option number 3, which is capital growth. Okay?
Yeah.
Now, let me just explain what the 3 means so that we see exactly how equities fall in capital growth and income. Now, capital preservation, I've said, is just again, I'd like to say a disclaimer that finance people are not so creative, so they use words as they are. So when I say capital preservation, I mean exactly that. And capital is let's say, is the money that you would like to start investing with or start a business with, right? So when I say capital preservation, it means when I put money here in this option, I will get that money. If I put 10,000 here today, tomorrow when I come, that 10,000 will be there, right? My capital has been preserved.
Yeah.
When I come 2 months later, when I come 3 months later, or even a year later, my capital has been preserved, right? That's called capital preservation.
All right.
Right? Again,
Mike,
saving.
to make it clear, we are talking about capital savings in stocks.
Yes. No. We're talking about investments.
All right. Yeah,
so that is capital preservation. Okay. Now, number 2 I said is income. Okay. Now, income is where you put money or capital, and then when you have invested this capital, in between the time that you're going to recoup your investment, there is some money that comes to you. Again, income.
Yeah.
You get. Okay.
Yeah.
And then capital growth is when I put my capital, the money that I choose to invest, I expect this money to grow.
Yeah.
Right?
Yeah.
So I put 10,000 here. Tomorrow I expect it to be 10,500 shillings.
Yeah.
Next month I expect it to be 11,000. You see?
Yeah.
Capital growth. So you see the difference between capital growth and capital preservation.
Yeah.
All right?
Yeah.
Good. Now, here is how stocks fall into income or capital growth.
Yeah.
And maybe I will say this by answering a question that I presume that you might ask later.
All right, I'll ask it again.
Yes. So you might probably want to ask me, how do people make money in stocks?
Yeah.
Or in the securities exchange, in the stock
Right.
market, right? Now, there are 2 ways of making money in the stock exchange.
Yeah.
One is through dividends. Okay?
Yeah.
So you buy a stock or you buy a share or an equity
Yeah.
in a company, and this company will make profits. And if the company makes profits, this profit is divided amongst the shareholders. Okay? Now that is called dividends. Right? Now, it is not possible for you to get dividends if a company makes a loss. So you need, once you start or you would like to start investing in equities or stocks, you need to know what kind of companies to choose. So you need to choose a company that is profitable. All right?
Yeah.
Yes. So that's number 1 way of making money in stocks is through dividends.
Yeah.
Number 2 way of making money is by selling. Okay?
Yeah.
So you buy low, you sell high.
Yeah.
So I come and then I want to invest in company X. And I put maybe company X, 1 share is worth 30 shillings. And then I put my money there, and then after 1 year, that one stock that was worth 30 shillings is now worth 40 shillings.
All right.
You see? So I bought at 30, now it is at 40, I want to sell. Okay? So buy low, sell high. So those are the 2 ways of making money in the stock exchange.
All right, Mike, I understand that we are learning, and I'm learning as well together with our viewers, I hope. Now, how much do you need to get started? Can the hustler manage to get started in trading in stocks, and how?
Yes, sure. Now, if you want to get started in stocks, you have to know that number 1 thing that you need is a CDSC account. Okay? You need a CDSC account, right?
Yeah.
And then number 2 thing, you need to identify a licensed stockbroker. Okay? And the Capital Markets Authority does this.
Yeah.
So it's the work of the Capital Markets Authority to give licenses to stockbrokers. So you as an investor, you have decided I want to buy stocks. So first of all, open a CDSC account, and you can do this through...
Mike, what is a CDSV account?
CDSC.
Yeah, tell us about that.
So that means, stands for Central Deposit Settlement Corporation.
All right.
Okay? So it's a corporation that comes up with accounts for you to be able to trade in stocks.
All right.
Okay? Yes. Now, number 1 thing, open a CDSC account, and a licensed stockbroker will help you to open one. Okay?
Yeah.
Now, again, look for Capital Markets Authority. They are the ones who license the stockbrokers. Okay? Now, when you identify a stockbroker that you are comfortable with, now you can start trading.
Yeah.
Now, after those 2, CDSC account and a stockbroker, you need to know that the minimum number of shares you can buy in a company is 100.
All right.
Okay? Is 100. So let's do some quick maths.
Yeah, please.
If company X is trading us at 30 shillings, as I had said, how much money do I need to invest?
Please, as you take us through math, I would really love you to solve it as well.
Yes. So that would be 30 shillings times 100.
All right.
Okay. So that means I will need 3,000. Okay.
Yeah.
If company Y is trading at 10 shillings per stock, how much will I need? I will need 1,000 because it is 10 times 100.
All
okay.
right.
If company A is trading at 1 shilling, so the stock is 1 shilling, how much will I need? I will need 100 shillings.
All right.
Okay. So remember this: the minimum amount of shares you can buy is 100.
Okay.
Now, how much you need depends on how much one stock is worth.
Okay.
Yes.
All right. Now, let's take it back. In October 2022, President Ruto expressed anticipation for the participation of medium, small, and micro enterprise traders in the Nairobi Securities Exchange, that is MSME, stating that the NSE has untapped potential, which will be the solution to Kenya's need for financial aid from foreign lending bodies. Are we anywhere close to that at the moment? Your take?
I think, first of all, it was a good declaration that the president said, but I think what is lacking is now the implementation of it. Okay?
Yeah.
Because when you look at the stock market at the moment, not many companies are trading there, right?
Yeah.
Because the minimum requirements required for a company to trade in the stock market are high.
Yeah.
And you will find that MSMEs are not able to meet the threshold. Okay, so you will find that it is the blue chip companies that are mostly trading in the stock exchange. And now this means that the policymakers will have to probably look at the regulations so that they can allow MSMEs to be able to trade in the securities exchange.
Great. Now, how do I choose the best company for purposes of trading in the stock market?
All right, good. I like to say this: when you are choosing the companies to buy shares in is just like when you're going shopping. You know, what are some of the things that you look for or look at when you're going shopping? Again, it's quality, it's value, it's durability, all these things. Okay, but now let's take it now to the stock market.
Yeah.
Number one thing I always tell people, and I said this before, look at a profitable company. Why? Because a profitable company is a company that will be able to declare profits and then dividends from these profits. And now these dividends will be distributed to the shareholders. Okay?
Yeah.
If you go for a loss-making company, it is highly likely that you will not get any returns in forms of dividends. Okay?
Yeah.
So number one, look for a profitable company. And it is easy to do this because all listed companies are mandated or required by law to publish their books of accounts each and every year.
Okay.
Okay? So after the fiscal year, and you will see probably in June, July, you will see when you open the papers, you will see companies declaring or publishing their books of accounts. Okay?
Yeah.
And that is where you can see whether a company is making profits or losses.
Okay.
Or also, if you are technologically savvy, you can log into the company's websites. All the publicly listed companies, they publish their books of accounts in their websites. Okay? So number one is profit.
Yeah.
All right? Number two thing that we need to look at is the product or the service that this company is selling. Okay? So look at the product or the service that this company is selling. And then what you do is you ask yourself, is this product or is this service going to be needed 5 years or 10 years down the line? Okay? So that you know, again, durability. Will this product or this service have demand? Okay? So that I know I am buying in a company that its product or its services will have demand in the future. All right? So that's number two. Look at the product or the service and then ask yourself, will it be in use or in demand in future, 5 years or 10 years down the line? Okay? Number three thing that you need to look at is the market.
All right.
Okay? Now the market is the people who are going to buy this product or this service that I've told you to look at. Okay? So ask yourself, this product or this service that this company is offering, is the market growing for it? Okay, the people who will need or who will want to buy this product or this service, is it growing or is it shrinking? Okay, so that's number three, the market. And then number 4 thing that you should look at when you are considering to buy stocks in a company, and this is very critical, is the management of that company. Okay?
Yeah.
Now, the management is the people who make the day-to-day decisions.
Yeah.
Okay? So, and how can you know whether these people are good or bad, or they make sober decisions?
Yeah.
Again, just in the media, you will hear about it in the media.
You recommend the media for that type of information?
Yes.
Right.
But again, credible media like KUTV, they will give you, you will hear in the news, company XYZ, the CEO has done this, the CEO has announced this, or you might even hear controversial things. Oh, the board is in rambles.
Right.
Okay? So, and then also from the media, you can also listen also for ground. That's what we say.
All right. Yeah.
And you hear what people are saying. You know what are people saying about this company? Because if there's something they're saying, there's something that they have heard somewhere, or there's something that is brewing up. Right? So that's number 4. Look at the management. The management, the people who make the day-to-day decisions of this company that you are considering buying stocks in. What is the word out there about them? Yes. So those are the 4 things that you need to consider before or when you're buying a stock. All right.
Now, we are told not to put all our eggs in one basket. Is this applicable in the stock market? Can you tell us about that?
Definitely. When it comes to investing in general, don't put all your eggs in one basket. Okay? But because we are talking about stocks today, I will talk about stocks.
Yeah.
Okay? So, when you look at stocks or companies that are trading in the NSE, they are divided into segments or sectors.
Yeah.
Okay? You will find agricultural, you will find banking and insurance, you will find telecommunications, you will find, I mentioned agriculture, right?
No.
Yes, so you'll find agriculture, you'll find manufacturing, right? Now, again, don't put all your eggs in one basket, because let's say you decide to buy stocks in banks, okay?
Yeah.
And a policy is made, okay, that will determine all the banks.
Yeah.
That means, and probably that policy might not be good to shareholders or for shareholders. What does that mean? That means that at that moment, because of that news, again, we need to be aware that the stock market is just like any other market. It changes every day, okay?
Yeah.
So if a policy is made today that will affect probably the banking sector, that means that the stock prices of probably all the banks will be affected, all right?
Yeah.
So if you had bought stocks or shares in banks, that means that your portfolio might be going down, okay? Again, probably let's look at probably the transport sector, and probably 2 years down the line or 2 years back when COVID came and people were not traveling.
Yeah.
Okay, so what does that mean? That would have meant that stocks in the transport sector, if they are, would have been affected.
Yeah.
Okay.
Right.
So do not again buy stocks in companies in the same industry.
Yeah.
So you can buy banking, you can buy telecommunication, you can buy agricultural, you can buy manufacturing. Okay. So again, spread your risk.
Right, Mike. Now that you have invested in the right stocks, for how long do you hold on to them? Tell us about the short-term and long-term investments in stocks.
All right, great. Fantastic question, Anne. Now, not even in stocks, but when you're investing, when you're saving, when you're putting money somewhere, always have a plan for it.
Yeah.
Have an end goal. What do I want to achieve with this money that I am putting here? What do I, first of all, you learned about savings last week. So what am I saving for, and for how long, and for how much do I need to save? Okay? So that saving does not become boring. Okay, now, because we're talking about investments, again, why are you investing? What is the purpose of your investment? Okay. Now, first of all, the purpose will direct you to what kind of stock to buy. Okay. And then also your, let's say, where you are at in life will direct you to making that decision. For instance, there could be people who are looking at retirement. Okay. So when you're looking at retirement, one of the biggest problems in retirement is the lack of income, especially if you've been employed somewhere. Okay.
Yeah.
So if you are looking at retirement, or if you're almost retiring and you want to invest in stocks, you will want to consider stocks that will give you dividends, and this dividend will be income. Okay?
Yeah.
If it is young people like you, Anne, and I see you just started in your career, probably you have some time, okay? So you can decide to invest in growth stocks.
All right.
Probably stocks that will not give you an income at the moment, but they have
promising future.
Promising future. Thank you for answering me. Yes. So again, look at those conditions. Okay. So what am I investing for? So am I investing short term, long term, and then also how long am I investing? You know. Yes.
All right, now, Mike, we have a question coming in here. Now, somebody's asking if you are buying those stocks at the lowest and selling them at the highest, who buys them at the highest now?
It's the market. It is a market. Okay, the stock exchange is just like any other market.
Right.
When you go tomorrow morning when it opens at 8 a.m., you will find people buying and people selling. So you won't even know. You just know that there will always be demand for that. Okay? Because you could be saying, I bought this at 30, I'm selling at 40. But there's someone who's buying at 40 and they're looking to sell at 70. Yes.
All right, now what you're trying to say is that everyone always has a target market. So whether you buy or whether you don't buy, there's somebody who always buy that product.
Yes.
Perfect. Now, I bet we'll continue this conversation later on. Michael, thank you for making time for us tonight.
Thank you for having me.
We are taking our second short break, and that we are coming back with more stories, so stay tuned.